Welcome back to us charting our way to a healthy net worth. So, in this channel, of course, we speak finances, and that's a way for us to get to a place where we are healthy when it comes to our net worth, right? And I've been meaning to post this video or to record this video, so bear with me. It might seem a bit out of touch in terms of when it's coming out. However, just bear with me and listen to me for a bit, and let's still use this lesson to get to a healthy net worth, right? So I found that we have a lesson to learn from our South African Revenue Services, the taxman. When tax season comes along, right, we all have, okay, not all, some people will receive an automatic assessment. And with that automatic assessment, it's not for you to just click accept, but it's your duty to actually go into the actual IT3A that you might have received. And you need to literally go line by line to confirm that what's on that IT3A is actually something that makes sense and it's actually true, or it matches what they have on their system. It's not for you just to accept. You need, like, it's your responsibility. So they might say, we've automatically checked all your things, and this is what your returns say about you for the past tax year. Your duty is to literally go in. If you have by any chance received an automatic assessment and you just click accept, trust me, should any issue come along in the long run, it's not going to be nice to sort of change the outcome of your returns because you just pressed accept. Versus if you actually go into the system, check line by line and confirm that what's on your IT3A and what they have on their system is actually correct, then it's easy to dispute because they do give you an option to dispute. It's easy to do so. Why am I talking about this? There's a lesson to be learned. I'm not sure about you, but I know I've received calls a number of times from financial institutions, whether it's in the banking sector, whether it's cell phone contracts, whether it's clothing contracts. So there's always someone who has auto-assessed you for a financial product, especially liability. Not always an asset. People don't really call us for something that's asset, money generating. Generally, those are sketchy business, but someone will always call you and say to you, ma'am, sir, you have been auto-assessed to receive this credit facility because of such and such and such a reason. How we dig ourselves into a place where we are continuously going towards the unhealthy part of the scale when it comes to our finances is, it's like, oh, is that so? I can take up 10,000 Rand credit. Bring it along. And then we just say yes, because someone at the end of the line said, you have been auto-assessed. You meet the criteria to get 10,000 Rand liability. Then someone calls you up, maybe on the same day, in the same week, and says, ma'am, sir, you qualify. We have auto-assessed you. You qualify for a cell phone contract. This is how much you'll pay for 24 months. And I heard that now there's 3 years and so forth and so forth. I don't know how long it is now. I have opted to rather stay. I think I've shared in one of my videos. If you do go back to one of my videos, you'll know that I'm a person who then at some point decided no more cell phone contracts. But anyway, back to the story. Someone will call you, ma'am, sir, we've auto-assessed you. You qualify for an iPhone 16. I don't know, the latest is a 16. You qualify. This is how much you'll pay. And without even thinking about it and actually going back to check your numbers, you just say, oh, yes, is that so? I can get an iPhone 16 and I can only pay like 300 a month. What? for 3 years, it's fine. I mean, I can afford 300 Rand, right? This is the lesson I want us to take from this. From a South African Revenue Services perspective, they will auto assess you. It's your duty to go and check line by line. We need to apply the same when it comes to, hi sir or ma'am, hi sir or ma'am, you have been auto assessed to get this and this liability, to get this and this credit facility. It's actually your duty to say, okay, I hear you, no thank you, or I hear you, can I confirm with you either tomorrow or the next day or the other? Because you are taking it upon yourself to do the duty that you should be doing by going back to your banking statements, because bank statements tell the story. They tell us, what are you being charged for? What are you spending on? What interests are you being charged on either credit facilities that you currently have? What is happening with your money as it hits the bank? It's your duty to go and check all of that, rather than listening to the person on the other line who said, you've been auto assessed. Yes, they've auto assessed you, but do they know the real story behind your finances? They might have seen that maybe this and this amount hits your account. They might have seen, I'm not sure what matrix they use, or maybe they just use the credit score that's sitting on the different credit platforms or credit report platforms. Maybe they're using that to say you've been auto assessed. I don't know. But they do not know the nuances that come with the money that hits your account. I mean, think about it. They might have checked your credit score, right? However, maybe you've got two credit facilities, which leaves you with a lot of disposable income. But remember that disposable income needs to cover other expenses that maybe might not be properly reflected in, especially the credit score itself. Because the credit score is just telling them that, okay, this person has credit facilities, but this person is up to date with their payments because they're still on green, or they have a credit score above 500. Maybe that's all they use. I think I'm yet to discover what exactly is it that they're using to tell you that you're auto assessed. But I've got an inkling feeling that it's just probably coming from the fact that your credit score maybe is above the 500 or whatever metrics that they use. However, like I said, they don't know the little other things that come with you living from one paycheck to the next, and comfortably so, right? So you might have expenses around. So for example, maybe credit facilities have come off. You've got accommodation. Maybe you have a car. Maybe you have children or a child who needs to go to school, and maybe it's not an auto payment. I don't know. Maybe let's think entertainment. Some months, there's something called sinking funds, where there are things that just need to happen. For example, if, for example, like myself, if my birthday is in May, I know in May, for example, there's that sinking fund because probably I'd want to do something for myself, or think of someone else, a loved one or whoever, who maybe has a birthday or at a certain month. That birthday is not shifting, so we know that there's that sinking fund that's gonna weigh you down a bit for that month, because that month there is a birthday that needs to happen, gifts, celebrating the birthday, whatever it is. So like I'm trying to explain, maybe I'm long-winded about it, but they do not know the little nuances that come with the disposable income that's left. All they can see is probably your credit score, or maybe they've got some other metrics that they're using. But like I said, I've got an inkling feeling that it's just coming from the fact that Utobeka, her credit score is above 500 maybe. Therefore, she can afford this other liability. So, and then I have to then say, wait a minute, I hear you. I hear I've been auto-assessed. let me check my numbers properly, and literally going into your bank statement, highlighting. They say to use different highlighters for that exercise. For example, highlighters for liabilities, highlighters for entertainment, and then you can see what exactly is happening and can you actually afford this credit liability or credit facility that they are offering you. And chances are you probably cannot afford it, because honestly, if you really needed a specific credit facility, you would have gone to the institution yourself. You wouldn't have needed someone to call you. So, you know, so like I said, what we are drawing from this video is we have a lesson to learn from what happens with the tax season when we need to file our taxes, being auto assessed. At the end of the day, the responsibility lies on you to actually make sure that what they've assessed is correct and accurate. It's not as easy as saying, okay, oh, they said I've been auto assessed. Oh, cool, accept. Same applies to the people calling us on the other line and saying, sir, ma'am, you actually have been auto assessed. You qualify for this credit facility. Same applies. It's up to you to actually go and check if you actually can afford this credit facility. Like I said, chances are you cannot, but maybe you can, and maybe it's a cash injection that you can really, really use. But make sure you've got a plan in place to know that should anything happen to that income or that disposable cash that you have available, how are you going to deal with that loss or change? So don't just accept and say, oh, I've been auto assessed. Oh, cool. Let me take the money. Let me do a birthday. Let me take the money. Let me do this, that, and the other. It might work against you, and it will tip you on the scale of unhealthy when it comes to your finances, rather than tipping you on the scale where we are getting to a place where we are at a healthy net worth. I hope this is a helpful video, because it actually dawned on me when I was like, oh, tax season, oh, auto assessed. Actually, we always get calls that we've been auto assessed, and this is a lesson. We actually should be checking rather than just saying, oh, oh, oh. Because I remember with myself, I think there was a time where I was moving from the safety net of home and obviously needed furniture. And the decision that I made to buy like specific furniture that I needed, it didn't come from a place where I had actually checked my numbers properly. It came from a place where I got to the store, they're like, oh, you can afford this much credit. And then I think I took two items, not to the limit that they had given because it was a huge number. I just took two items that I thought were really needed, but at the same time, I didn't take the time to actually go back and really double check that can I actually afford these things realistically, rather than them saying, actually, we've assessed you, we've put your details, you actually can afford way more than what you need. And so just that lesson, just like the tax season, when you've been auto assessed, know that it's your duty to check and challenge what they have put and what is actually on your IT3A. Same applies to credit facilities. If you get a call on the other line or an email or whatever it is saying you qualify for a specific credit facility, it is your duty. Make sure you really go back to your bank statement. If you've got more than one account, make sure you are checking, but especially the account where your debit orders are coming off of. So yeah, I hope this is helpful. Please do like, share, subscribe. Most importantly, please share it with someone else who's actually sitting at a place where, in terms of debt, they're in a not so nice place, but also even for those who are not in a bad place, financially, they still could learn a lot from the fact that check and challenge for yourself, and do not listen to someone else who doesn't know the nuances that come with your disposable income. Thanks for watching. See you on the next one. Bye.